Hi guys, my name is Naomi Beaumont, National Presenter for Positive Real Estate. I'm also a co-author and a blogger. I'm also a head coach for Positive Real Estate for property in the ACT. One of the magic questions that's out right now is to fix or not to fix. And with all the media coverage, who wouldn't be confused with what's going on? The economists are saying interest rates are going down, the banks are saying they're going up. How confusing is it at the moment? But with everything that's going on, how do we protect ourselves in any market? And that's what I've been really focusing on for the last 6 years with Positive Real Estate. Really interesting to watch people when they sit down with me. One of the first questions is, how am I going to do this? How am I going to build a property portfolio and protect number one? And one of the first things I always say is make sure, if you're going to fix your rates, make sure you do it 50-60%. Make sure that you leave a variable and the rest fixed, mostly because you want to help yourself move forward. I also will make sure that with every client at Positive Real Estate that we work with, we have a buffer in place. It's really, really interesting that I see so many clients. Just recently I had a client that I worked with in Melbourne that had 4 properties, no buffer in place, and I can tell you the truth, they were living in massive, massive pain. They hadn't had a family holiday in 5 years. They understood that they needed to build a property portfolio for growth and for their children and to live an amazing life. The issue that they had was they weren't living their amazing life themselves. So what we want to do is make sure we set up a buffer in all places. And what I mean by a buffer is having your shortfall for the next 2 to 3 years. So let's say your shortfall was $25,000 a year. I would make sure in all cases that I left $50,000 in an account, which would be my sleep at night factor. I know if interest rates go up or interest rates go down, I'm protected at all times. What you want to do is weather the storm. Now I say that because I never want to get that midnight phone call from a client saying, hey, I've got no money. I want to make sure that every client is comfortable about the process that they're just about to go into. Hey, wouldn't you love to go and build a multi-million-dollar property portfolio and not have to live on baked beans and rice? So in my opinion, if interest rates do go down, how will that affect you if you do rush out and fix in your rates? Now, I had a client in Perth a couple of years ago that had 3 investment properties, had fixed all his rates at 8%. Interest rates had gone down, property prices had gone up, so he's made a little bit of money. It cost him $55,000 to discharge those mortgages to get his equity out. Could that affect you? Before you rush out and do anything, come and see us at a property investor night. Make some good educated decisions, because in the end, you're wanting to build your own wealth, and it's all about education.